Welcome, everyone. It's Angelo Robles, host of the Angelo Robles podcast and the founder and CEO at Family Office Association. What we're covering today: invest in this inefficient, often uncorrelated asset class. You have to listen or view in to learn what it is. But for my live audience, or if you watch this on video, I'm just going to come out and tell you. And that is going to be small businesses. Small businesses are a big deal. We're going to mainly talk about it from an investing perspective, but for the budding entrepreneurs or children or grandchildren of our members and relationships, we're also going to talk about the state of entrepreneurship today and how there's many aspects that are much better than ever before. And that has been an underlying theme that we've covered a fair amount really since the beginning of the year. Let me give a little context to our special guest today, who is Peter Troob of Troob Capital Management. And the author, I mean, come on, everyone has read this book. It's a business school favorite, Monkey Business. So we highly encourage, if you haven't, to check it out. It really is an iconic book and really very amazing. I always enjoy reading and rereading it. And we're going to dive into the fascinating world of small businesses as financing has dried up from the traditional banking system and institutional money. As that's flowing into larger scale private equity and private credit funds, small businesses need capital to expand. The Troob family has been working with small businesses since they built and sold the Geneva companies to Citigroup over 20 years ago. So it's going to be really exciting to have Peter on. He's got deep experiences in this. And without further ado, Peter, how are you?
I'm good. Thank you for having me on.
Oh, it's a real pleasure. Why don't we just jump right into it? How did your family get involved in the small business space originally?
Well, in 1990, my father was the age that I am right now, and he bought a small company in Newport Beach, California, that sold small companies. My brother and I, because it was we're old enough at that time to be able to work with him, and Geneva Companies built itself into the largest small business brokerage company in the country. We ended up selling it to Citigroup by 2000, but effectively what we did was evaluate small companies and the ability for them to either pass that company to their heirs, or if that wasn't an option or an alternative, to sell that company to another buyer. And so we would evaluate over 1,000 companies a year, and we would sell between 50 and 150 a year.
Wow. I mean, that really is amazing. So building that up over 10 years and having an exit to a gigantic organization like Citigroup says a lot about the entrepreneurship and nature of you and your family. So kudos on that. A question, taking it now, over 20 years later, and I mean this a little bit tongue in cheek, I don't know if really a lot has changed. Like I said in my open, if you're a business of some level of scale and EBITDA, investment bankers are probably going to be the route to go, or investing through private equity or getting interest from private equity. But for the small businesses, even those that are pretty darn successful and may have a vision for growth but wanting capital, it's hard. And still using business brokers probably is the way that most are going. So I'm chuckling when you say that. My God, has a lot really changed in 30 plus years?
I think you're right. A lot has not changed. I mean, the technology side has changed, both for the company and for their ability to evaluate themselves. And the other side of it is actually, for the sort of the negative side, is the local regional bank has left the space. So where the family business could walk into a local bank and get a loan, and they knew them from the community, that was the lifeblood of capital for them. That's gone. So it's weirdly, I would say it's almost harder to be in a small business now on a capital front, but it's better, obviously, because technology has helped everything become a little more efficient.
I mean, relative to that, as a follow-up, let's use 30 years, since that goes back to when your dad had that opportunity in 1990. Besides that, the overall answer to my question, the macro, what else has really changed? I would say the technological evolution of the internet, oh, that might be pretty big. And we'll get into a little bit later how we're on the early cusp of digital and DeFi and how that could be impactful in both good and maybe challenging ways. So we'll save that one for a little bit later. But besides that, what else stands out to you?
No, I mean, look, what really stands out is things need to get done in the economy. People need to lay down the roads. People need to waterproof cement. People, cement has to be laid. People have to put up telephone poles. Now maybe you have to put up, a wireless internet connection but business needs to be done. It doesn't all get done, on the computer. And so, there are companies and family offices and family businesses that do those things. Like we all take them for granted. You open up a door and the door has glass on it and you open it. Someone puts that all together. It doesn't all get done over there. It gets done here. And so that's why I love small business. I mean, there are businesses locally, regionally, and nationally that are there for people to grow. And it's just, it's not all about Google and Facebook and Apple. There are smaller businesses that I think run this whole country personally.
Oh, for sure. And we're going to get into some opportunities, maybe actually sooner rather than later, that are more beneficial than ever before for even non-traditional businesses that may not really even have scalability interest, really more the solo entrepreneur, but they could be happy and they can make a living. And those opportunities are, I think, that has been a big change comparative to, say, 1990. And we're going to get into that shortly. A question did just come in. I thought it was a good one. And this may be more into the solo entrepreneur than scalable. And that the world of Amazon, they specifically asked with, I guess, resellers and those kind of businesses, have you invested in businesses that are on a platform like that? I was going to mention them more so from the solo entrepreneur perspective, but please elaborate.
Yeah, no, I was actually just out with people last night talking about the same thing and looking into doing something in that space. It's amazing, right? I was told this, so I'm not sure if this is good information. I was told that 3,000 new businesses come onto Amazon a day. That's what they said. So don't quote me, but if that's true, even if 1/3 of that is true, that is unbelievable. It's actually, in some respects, unbelievable and unbelievably inspiring. But what that means is that people can start businesses and get scale and get people to hear what they're trying to do through Amazon or another technology. But here's Amazon, and suddenly become very successful because you had a good idea and you were able to then market it and have a fulfillment center fulfill it. And I mean, in some respects, that's awesome. That's terrific.
Yeah, and look at a great organization that Amazon is, a great company supporting, hundreds of thousands of employees, getting more active than ever during COVID. And yes, I know they have AWS and all that, and it's a wonderful entrepreneurial story. Bezos, amazing. But to give people a little bit of hope, they don't theoretically create something. They kind of are a middleman, a very, very, very dominant one, and an amazing business story and scalability, and how relatively poor, I guess, the stock performed early on for many, many years. But again, it's not like they're creating specifically something, a widget, whatever it is, and selling it. They are an intermediary.
That's 100% right. They are an intermediary, and they are disintermediating pretty much all of retail. I mean, you need something, right? A soap dish, whatever you think of. You just go on Amazon, click away, shows up. You don't run out to the store. Like, why? So, and by the way, the person who's running Amazon now, Andy Jassy, went to high school with me and my brother, and we played tennis with him.
That's crazy.
So he's a very good guy. I'm sure he knows that his business is now, helping to increase commerce in an unbelievable way.
And I would say, what, about 7 or 8 years ago, I guess a competitor, and has done very well, like Shopify has done great.
Yeah, that's right. No, I mean, look, there's enough room. I mean, that's the beauty of business in general. And that's why I love when people want to start a business, because there's enough. I mean, who would have thought that, like, you could start a business with socks, like the Bombas guys. And then, I mean, who thought that the sock was bad? Like, and suddenly there's a business. I mean, there's so many businesses and evolutions of businesses. I mean, my view is that's awesome. And people who are younger, I think should be going into that hand over fist. The more mistakes you make, the better you're going to get. And if you are shy away from trying, you'll probably shy away from succeeding. That's my mantra. Like, keep trying. And I'm pretty impressed by the young people, at least that I meet now, coming out of school. They're so smart.
I completely agree. And I was going to bring that subject up, but I keep on saying that about everything. Okay, let's dive a little bit into that. So my experience with, I would say, under 30 millennials, like you said, highly educated, Gen Z, equally trending towards high education, a little different perspective, a little bit more grinders and more native to technology. So I've been very impressed, but I would say the 17 through 21, 22-year-old, and I get approached from them. I don't want to divert the conversation, partially due to some of them have caught on to some of the things I do on entrepreneurship and follow us on YouTube. And part of it is my interest in the digital world. And when I wear my Ethereum t-shirts around, walking around, I can't tell you how many times that I get stopped. And it's always by someone relatively in that age bracket. So it's kind of intriguing. You brought up school, and I've gotten in trouble in my podcast on some of this. So why not? Let's get in a little trouble again. Do you really need to go to college per se, and arguably, depending on your family financial situation, accrue early six-figure debt if you know that you want to be an entrepreneur? Now, if you get a chance to go to a top 10 school, top 15 school, and get scholarship, that's going to be hard to turn down, and I would likely recommend that. Now, let's ignore the other benefits of college: networking, getting away from your parents and learning how to be independent, engaging with people of different backgrounds, race, creed, color, religion, how could I say this, G-rated, but likely for many, that will be some of the first love experiences that they would have. I mean, that's incredibly valuable. But when I look at the pure educational aspect, I don't know if it's kept pace with the times. I think there's other ways to learn, and that younger audience loves YouTube, and there's amazing resources on YouTube. And if a lot of professors, here's what's going to get me in trouble, are older and tenured and locked in and set in their ways and not adapting to the new things that we're kind of talking about today, I don't know if that education for some people is really going to be worth it.
Yeah, I agree with you. I think, look, if you're a self-starter and a self-teacher, you can teach yourself everything on the internet. You don't need, you can, by the way, download people's lectures and listen to them just like the kids are doing now, because they're not allowed to go to school anyway. They're sitting there doing that. Again, if you take out the socialization, you take out what you were saying, like all of the connections you make, because those
that's super important.
And those are important.
That may be worth it in and of itself. Yes.
It may be, but you learn how to deal with people in that way. But in terms of, look, my son just graduated high school. He's a freshman in college. My daughter's a junior, and I know all their friends. There are kids coming out of high school that I'd hire now. Like they're great, and they could start businesses now. But this is just my personal touch on this, is like, I was a political science major at Duke. I wish more kids, if they're going to go, take the liberal arts stuff, learn about the history of rock and roll, and, don't just take economics and math. Business isn't that hard. Truthfully, it's not, you don't need math beyond about 8th grade. You don't need to know every regression analysis to be in business. You need how to add, subtract, multiply, and divide, pretty much. And
I can tell you what you really need to know. You have no business, you have a hobby. If you're not generating money, you better learn how to market and sell.
Correct. You better be a good salesman. You learn how to sell. But what I would like to see more is you better learn how to write and communicate. That's, if you can do that well, you'll be fine. And I mean, take a philosophy class personally. That's what I would say.
Absolutely.
And by the way, take a lot of psychology classes, because I would say business is about 10% economics and 90% psychology, and people, why people make decisions, why they do things is much bigger choices, and decisions are made because of what goes on up here, not just math. I mean, it's not all math at all, when you're buying and selling a business or lending to them.
Yeah, I mean that, and I look at real estate investing. Sure, math is important, it's anchor, but it's relatively, like you said, it's eighth grade. You don't need to get super complicated. And what you don't know, you could probably just whip out your phone and calculator and kind of figure it out. It's so
Well,
true.
well, what did Einstein say? Einstein said, anything you can look up, you don't need to memorize. But now,
Oh my
now,
God, yeah.
but
Now,
now you now,
woo.
but now you can basically look up everything. So I mean, it's again, I don't have an answer. I liked college. I loved college. So I hate to poo-poo it, but the reality is it necessary at $75,000 a year? I don't
Yeah, I
know.
mean, I'm going to keep some things a little close to the vest, and I have a senior about to be a freshman in college in September, and we've had this conversation, and the conversation has come up. If I were to take a lump sum of likely what I'm going to be paying for college, and assuming again he wants to be an entrepreneur, not a medical doctor, not someone where, and eventually that's going to transition more online when VR and all that becomes a little bit more into fruition. But and 3D, but I don't want to drive people crazy. But honestly, if I were to just to give him 150K, he might be better off. I mean, I can make that argument. I also have a relative that's graduating in a year and traditionally wants to be in the world of being kind of a financial advisor with some interest in entrepreneurship. And I'm looking at the resume and what he learned, and there's nothing wrong with it. He's dedicated, he's a smart kid. But dude, I get resumes like that every day. They're just kind of generic. Now, maybe if you went to a top 10 or 15 school, that would pop a little bit to the top of my mind, like Duke, like you said. But if you want to be an advisor, how are you adapting to today's world of even crypto and digital? I know you're not learning it in school. And if I was an old guard RIA or advisor, that may intrigue me that you're going to be really fluid in that, but nothing in what you're showing me on the resume is talking about that. And what did you learn in school about EQ? What did you learn, like you said, on psychology and philosophy? To some degree, how that correlates to marketing and sales? Probably very, very little. But I don't want to beat that dead horse too much, but maybe close the commentary on college for us in some of my comments, please.
Oh, have me close it. My answer on college is, if you have the luxury to go, go. I think it's good. But at the end of the day, and by the way, I don't agree with the top 15. I think colleges there's depth down to hundreds of terrific schools with really bright people. And I get resumes all day long, and the harshest part, and it's terrible, but it's the way the world is now. I look at resumes and I don't know if these kids got in because they were smart or their parents knew people. I don't know anymore. And I stopped trying to figure it out. I meet them, I listen, I talk to them, but I could care less if they went to state universities or Harvard. I don't, there, I personally think there are a ton of very, very smart kids all over the country. That's what so.
Now, in terms of someone, let's stay relatively maybe in that age bracket, looking to be an entrepreneur and start a business, I guess, like, what recommendations would you give them? How would you give them honest feedback? And if they're looking to start something where, again, you don't need brick and mortar and lots of money, in terms of something that may be more online centric, which you hope they would have some fluidity on, and even the world of marketing via social media, being an influencer,
Yep.
Learning how to build up a following, how to convert it maybe to Patreon. We spoke about that earlier. Not every business is going to be scalable, but it can make a solo entrepreneur very, very happy and make a six-figure living, or maybe more. And that takes me to Kevin Kelly of Wired Magazine, like 25 years ago, said you need 1,000 true fans. In today's world, of course, the more the merrier and the better. But I could argue maybe only 100 people that really believe in you, that you're providing value, that are going to give you $100 a month. That's what, 120,000 a year. That ain't half bad. And that's not even getting too fancy with selling merch, upselling them to master classes. I mean, there's so much potential. How do they get started?
Yeah, well, I think the first thing, I mean, and it's sort of obvious, but make sure whatever you're doing it because you like it. Don't do it for the money. If you do it for the money, I'm telling you, you'll fail or you'll be average. Like if you come out trying to count money and how to get it, I mean, maybe. But if you like what you're doing, whatever it is, then try to turn it into a business. First of all, you'll be passionate about it, and then you'll probably be successful. What I would do, as much as it's painful for young people to hear this, especially my kids, is go around and talk to old people, right? And listen and talk to them.
Over 25?
Yeah, right. No, and just ask them what they did well, what they didn't, why they failed on things, why things were successful. Try to figure it out, because if you can skip some of those speed bumps, you just get there faster. And so the thing I love, I mean, personally I wish, we all wish probably we were 25 again, is there's almost no business you can't, well, I'll say it the other way. There's almost every business you could do and be financially successful. Like
Right.
like it used to be like you had to go into very specific things like banking, consulting. That is no longer the case. You can go into sports and entertainment and music and arts. I mean, almost anything, and you can be wildly successful. And so you got to find your passion, though. You can't force it. Nick, certain people, you talk to them about basketball, like my son, and he'll tell you the 14th guy on the bench, if there even is a 14th guy on every team. And he'll tell you all about their lives. But I'll ask him about something like art, and he can't say, has no clue. So it's just because that's what he loves. So he should follow what he loves. Like that's important in my view. And I think if you do that, you'll be successful.
Yeah, I mean, there's ways to, again, make a living. I'm not saying you're going to build an Amazon. Come on. I mean, that may not be realistic, but the opportunity of being satisfied and making a living, and then you might even surprise yourself. I had up an interview, it's on my YouTube platform, with Paul Carter. Now, he was an engineer, so he's very smart. He had a side hustle. The side hustle was he's incredibly muscular and in great shape. He's a power lifter. He got fired from his engineering job that paid about 120 a year. He's in the Midwest. And he's like, okay, I'm making 60 to 80,000 in my side hustle, but what could I do to exponentially grow that? Long story short, in the world of effectively personal training, but building up being an influencer, building up to tens of thousands of followers. And he was very open in my podcast. I make about $1.2 million a year in a so-called blue collar industry. Now, yeah, am I going to do that working one-on-one with clients? No, there's only so many hours I could do that physically in the week. And to some degree, only so much I could charge. That may cap me at maybe 150 a year. But how could I build up a following? How could I run ads against it in social media? How could I sell merch? And then we caught up a little bit about, in my opinion, how we should be doing NFTs. And again, I won't take the conversation too off track, but basically he's doing just fine in an industry that his parents would have probably said, he's in his 40s now, whoa, engineering, and you're now doing this? Yeah, and I'm making like 8 or 9 times what I made at something I lost my passion for in engineering. So again, there's absolutely ways to rise to the top of your field and even be a 7-figure earner for some of you, if that's important to put in the dedication in many, many different types of industries. And that relates back to the 1,000 true fans, how to upsell them to your top 100 and maybe your top 20. Maybe you do a boot camp for your top 20, you charge them 10 or 20,000 to come to it and join, you, Paul Carter, in Kansas City once a year. So there's lots of different things there. Now, there is something that I came across about a year or two ago that I think could change the dynamic of your type of industry on some level. It's called Flippa. And that appears to be an online platform to buy and sell businesses, often tiny businesses that may be for sale from like $1,000 to say $50,000. So do you have to start from scratch? Is this going to be a new model to buy and sell? And is sometimes buying an existing tiny business, but having creative ideas about how to expand it, what's wrong with that? Maybe that's a better idea.
Yeah, no, I think it's a good idea. I mean, it's again, just like in anything, buyer beware. Just be careful. I mean, if the person has a small business and they're selling it, there's a simple question: why? Right? And why can you take it and make it better? And I mean, these are simple questions, but just ask them. Don't think that the business that one person leaves and you walk into is automatically gonna work. And so, the idea that it can happen is pretty awesome. The problem is there's a lot of people who just, will create fake small businesses to sell to you. So I
Yes,
gotta
that
be
does
careful.
happen.
You gotta be careful. But getting a running start is always better. Having a little bit of a customer base, being able to start where you have a little bit of the guts of an organization versus scratch is a positive. But I will tell you, if you do that, make sure you understand how everything works. Because at the end of the day, starting a business is one of the best learning experiences you could ever have, because you learn about how everything works. If you don't know that, and when it starts to have a problem or break down, you won't know where to plug the hole. So you'll find, and by the way, this has always been the problem when we were selling businesses between I'm just using the father who started it and just used the son or the daughter who's taking it. They didn't understand how the business ran. And so you have to live it and breathe it to be the entrepreneur. I mean, you can't just purchase it and grow it. You have to know at least how it all starts and how all the connections are made, or you'll just miss stuff.
Oh, for sure. And that is where maybe school, from the educational part, to my opinion, may have value besides your maturing, is you learn how to think for yourself. Do your own diligence. It's your responsibility. And I find among the number one things that often get in the way, that probably to some degree happens to all of us, including, I hear you talking about what you just said, and I think of watch out for your ego and your blind spots. And we all have blind spots. We all think that we could turn something into nothing and be incredibly successful. And maybe we could, and having confidence is a good thing, but be a little careful on ego and blind spots. Let's turn our attention a little bit. You also managed money in the public markets, and very successfully for a long amount of time, but you kind of pivoted, I guess I could use the word, back into this space. Was this because of opportunity, or like you said earlier, you're just more excited and passionate about it, or a combination of both?
Yeah, no, I think it's a combination of both. I mean, look, the public markets was great to me. It was when I was in it, it was much less efficient. The efficiency is pretty high when you buy
Yes.
and sell stocks or public bonds. I mean, there isn't a gap or like an advantage of knowledge. I mean, if you're doing it fairly, it's a pretty fair playing field right now. And so it's harder to make money. So the game becomes basically more about raising as much as you can. So guys in our business would call that like management fee arbitrage. You're basically raising it because you know you're going to lose it, and you're keeping the spread as long as you can. I mean, that's just not the way I'd rather do better and make more and make a good return and have my investors say, hey, he actually made me a good return. The private markets are just less efficient. And due to that opacity, more or less, you have a bigger chance of making more money. I think and again, I say this, and I know I'm going to get a lot of crap for it from guys. I will still say, if you put your money in the S&P, you will beat every equity manager out there over a 20-year period. Period. So so why are we wasting all this time giving money to all these other people to try? Just put it in the S&P. That's what I would say.
For the majority of people, and Warren Buffett has said that relatively, I would say you're accurate. And for the last 10 years, other than the last 12 months, so through the teen years, whatever, 2010 through 2020, that absolutely worked, net of taxes and fees. I'll disagree a little bit, and maybe because I'm based in Greenwich and long short managers and all that, that we appear to be more of a stock pickers market now, and there's too many losers in the S&P 500, and I don't want them to drag me down. Now, I would have to watch out for ego and blind spots that I mentioned earlier. Could I pick a selective basket of 15 to 30 securities that would allow me more control and more opportunity to get alpha? But I will absolutely admit, over time, that arguably is incredibly debatable. And I would need to watch out for, again, ego and blind spots. And do I want to spend my time doing that? Even if I eke out an extra 100 basis points, is it really going to be worth it for me? What is it taking me away from? So those
Right.
are probably all things
Right.
that I should be thinking about.
I think that, right, there's an opportunity cost. And again, for a young person, what I would tell them, is spend that time building a business. That's what I mean. That's unless they love trading, if that's like the business they want to be in.
Right. Yeah. I'm like, maybe that's their business,
Right.
actually. Now, the one thing we do have to admit, when we're investing in private companies, it's way less efficient. I'm going to argue, more of a chance for things to potentially go wrong because of those inefficiencies. You're doing it because you think you're going to get an extra spread on your return relative to investing in the public markets, but you're absolutely sacrificing liquidity. So there is a trade-off here that you have to consider, putting on the investor hat for a second.
100%. That I agree with it 100%. You're giving up liquidity for return.
Hopeful return.
Hopeful return. But you're also on a value basis, usually in at a much lower value. I mean, the public markets have, some people would say have just, it's an asset, just like a house. There's only so many stocks, so many shares, and more money chasing it. So it just goes up. Like it just always goes up. It's unbelievable. And I know there's one day going to be a big problem, but I can't even imagine. I mean, trillions of dollars just there. So the question is it just an asset that has less, it's a supply demand. It almost doesn't matter. That's why, again, I go back to the ETFs and those things, because it's just a rising tide is going to lift everything, in my view.
Yeah, and I'll remind everyone, because we're in a roaring bull market, defying logic, but pumping money into the system. Everyone looks like a great investor when the bull market's, everything's going up. You're getting advice from everyone, and it's kind of working to some degree until it doesn't. So, there's going to be bull, there's going to be bear markets, there's going to be incredible volatility, especially in certain quote unquote asset classes. Peter, what are you most excited about?
What am I? You're talking about investing. What I'm most excited about is that I'm hoping that Springsteen tours soon. that is what I'm most excited about, because I've been.
Oh, that was an open-ended question. Go for it.
I mean, that is by far the one thing I'm most. I mean, I love the guy, and he and his band are getting older, and I'm just like, please. And by the way, if they'll start opening up music venues, I'd go every minute of every day. It's awesome. I mean, whatever. I spent a lot of time. I have friends who sort of own the Flushing Meadows, whole like complex, and I love going to music. So what I'm most excited about is that everyone can gather together and like watch good music. That would be the number one thing. But
maybe later this summer, we're hopeful. New York's going to be so-called completely open on July 1st.
That would be the best. But aside from that, what I'm hopeful about is, I mean, again, this is a selfish thing on my business, is there's small businesses out there. They need capital. I provide that capital. And luckily, the banks don't provide it. They give you a loan on your house and a mortgage. I'm not sure what else they do. And they take your savings accounts. I don't know what they do.
We are going to get to them and their not so good looking future a little bit later. Trust me. You can trust me on that one. Where do you see, in the world of small businesses, the greatest opportunities?
What do I see as the greatest opportunities? Is the small business? I would say, it's a business that can grow from, like, you want to go from being local to being sort of partially regional. And that growth trajectory is out there for people. And so, I mean, personally, I see if your family owns a business, don't poo-poo it because they own it. Like, I would embrace that. That is a running start into things. I think there is a lot of new businesses that have enough girth that they can really go to a whole nother level, both in sales and profitability. So I like seeing businesses that are, very local, but they can now go, say, 3 states, 5 states, 8 states. Suddenly you're regional. That is like, it's unbelievably liberating for the business and for the owner and for the company, by the way. I also like the idea, and I could be wrong, that there's a little more democratization of the organization. Like, it used to be small businesses were owned by a dictating kind of like father figure, and then everyone worked for them. Now I think you should share the wealth, and I see it at businesses all the way, the whole organization grows. It's like you're almost starting with like an ESOP, like you're almost starting with a plan for all the people. And if you treat your people well, they'll stay. And if they stay, they're the best employees you could ever have, is the experienced employee. So I'm seeing some of that in the small business world. I think it makes businesses just a lot stronger.
Yeah, for sure. I mean, I look at people like you coming in with deep experiences generationally as a family. So that's the advantage of taking in, I guess you could call it outside capital, is you're getting additional thought leadership from successful, talented people. And depending on your governance and how decisions are made and how active they need to be in certain decisions, I won't get too contractual, but at minimum, you're bouncing ideas off each other. You're not just here to have status quo and have kiss-ass people. You want to have people that challenge your ideas and vice versa. So that does often take businesses to another level, in addition to simply the capital that comes in.
Well, for instance, just so you know, I mean, like, and again, I mean, if you buy a business, because we've done that, but if you buy a business and then you go and you have a meeting and you go cut costs and grow revenue, that's meaningless. Like, we go and we'll spend, literally, I'll stay there for a whole week, and then my brother will stay the next week, and then I'll come back for the next week, and we might do that for a month or 2 months. Like, you have to live it, and you have to understand that you're just money and you're good advice, but you have to learn about how everything works to make good decisions and and be a good sort of steward of the company if you're going to buy it. I find that a lot of people go into private equity and they think they buy things and then they just sort of give them basic business school advice. And they think that that's going to do it. And you know what they do? When you walk out, they just look at you and they laugh. They're like, yeah, you don't think we were trying to cut costs and raise revenue? Like, that's your advice? So I think getting your hands dirty, doing the work I find that fun, personally. But if you don't, I think if you're going to be in small business, you have to like it. And you have to like either the concept of the business or the business itself.
I haven't seen either show in a couple of years, but I do think they're great. And someone just texted in, like, what do you think about things like Shark Tank, about Marcus Lemonis?
Yeah, I love those guys.
I think they're great.
I think they're great. I mean, look, these are smart people sitting around in Shark Tank and just deciding, and I know it's all done for television, but at the end of the day, they're basically just saying, this is what I pay for this, and this is what I think it's worth. And of course, I wish they could have hours to do this, not 1 hour. But I'm sure it takes longer, and they cut it.
Oh, they do a tremendous amount of editing.
And Marcus Lemonis, I've tangentially met him, but I've never met him directly. I'd love to. I mean, he's figuring it out, and it doesn't always work. Right. And I have a ton of respect for a guy like that. Like, it's a show and all that other stuff, but and by the way, there's lots. I mean, it's not that he may be unique, but there are a lot of people like that. And that's what makes this, again, it's what makes, I think, this country go, is small business and people helping small business grow.
For sure. How has COVID affected your world?
Well, I mean, look, at first it slowed everything down. I mean, look, one of the biggest, it's right now how it's affecting it, putting aside, health issues, is, to solve for COVID, the government has given away a lot of money. And now in small business, it's really hard to find good employees. Not good employees, that's unfair. It's hard to find employees because it's better for them not to work, some people, so that they get unemployment versus work. Yes. And I don't want to get into the whole, but it's unintended consequences of what the government thought was a good idea. And
Those happen all the time.
And that happens all the time. So I mean, unfortunately, if you're getting paid more not to work than to work, I mean, why wouldn't you not work?
And now you have to pay more, or the minimum wage goes up. And again, not to debate that, there may be merits to it, but you make it harder and harder for the small business owner.
You make it hard. I mean, yes, it's weird. Like, for instance, because I own a couple different businesses, my kids looking for summer jobs. If they get a summer job, then someone has to pay them. Like, you can't do it for free anymore. Like, that's not allowed, supposedly. You have to pay the kid for the 8 weeks because someone else you could have given the money to. But of course, if my child works for me, I'm not paying them. So weirdly, like, I want them because they're the cheapest labor I can find versus hiring someone else. I mean, it's ridiculous. Again, I want everyone to have a good wage and all that stuff, but you can't burden small companies with the same wage that you need to pay big companies. Like, big companies have more access to capital. So that's why family businesses many times bring in other people from their family, because those people will accept a lower wage to help the family business grow. So we've looked at businesses where literally a third of the workforce is the niece and the nephew and the son and the brother, because they're doing it as a family. It's an unintended consequence of, like, what the government thinks is a good idea.
Yes. Peter, how do you source deals?
It's hard. I would say that, I'll tell you, even though we have a very good way of sourcing deals, I probably source 1/1,000,000th of the deals that are out there. We basically have very specific calling efforts to small business brokers, to lawyers, to accountants, to companies that we know, to trade associations. Our goal is I want to get out of the middleman. I don't want the small business broker's business because I have to pay them just to make the introduction. But my organization is making hundreds, maybe even calls a week, and to be able to see opportunities. And we see a lot of things that are bad, and it's the only way to get to what's good. So curation of all those opportunities is the hard part. So, we reach out by, obviously we use email and we use, text. We use, but effectively it's a calling effort.
And in terms of, on average, and maybe the last 12 months is unique with COVID, but how many companies may you invest in?
We'll invest in about 15 companies a year, in one way, shape, or form. And we'll look at about 1,000. What
would be like a little too small? Like, what's a sweet spot for you?
Our sweet spot is, we'll start with $1 million, but we want to grow it to like $5 to $8 million. That's our goal. But we many times start small so that we see the wheel turning and making sure that things are going well. That leaves us with a lot of things that go off on the exit ramp. You start and you go, you know what, this isn't as good as we thought. We're going to exit. But that's our normal. For us, we like to invest between, when it's all said and done, between 3 and 15 million. That's our sweet spot. And it's a spot that I think no one likes to play in, and the banks aren't around, and the large funds think it's irrelevant.
What are common pitfalls you see by investors in this space?
I think the biggest pitfalls is you get both deal pregnant. You like it, you want to like it, you force yourself to like it. There's a red flag, you walk by it. There's a new red flag, you walk by it, because you're pot committed. And so you have to be honest with yourself. And then when you see something that tells you to say no, you may have wasted months, and you then just have to say no. Like, that's usually the rationalization of research that you should have done. You finally do it and you rationalize it that it'll get better once you own it, and it doesn't get better. It's a very hard skill, and I make that mistake. I continue to make that mistake. It's hard because you emotionally want to do it.
We have a member that's active investing at one or two notches of larger companies. And he's like, listen, I often need to do 2 plane trips, meaning whatever, say it could be in Iowa. So maybe the person, I don't know, flies to Chicago, then does a puddle jumper. You get the point. How regional are you in what you do? And do you find there's actually amazing deals in areas that are a little bit less covered, if I could use that
Yeah.
word?
I mean, I would call us national, but if I can't get either, again, investing is about people. It's not just about the deal, it's about people. So I want to make sure the person's responsive. I want to have a number of Zoom calls. I want to have Zoom drinks and hang out with them and get to know their wife and their kids, or their husbands and their children. I want to go and meet them in the flesh. I like seeing it. I want to find out. I mean, again, it goes to the whole whatever 7 degrees of separation. It's less than that. I mean, it's like 3. You could.
Yes.
I want people to know that person, how they act, who they are. Because if I can't do that, I don't know how they're going to react when there's a problem. And that's when the real person comes out, is when things are hard. When things are easy, everybody's happy. And so it takes us time. And if someone's trying to hustle me, we just say no, because you can feel a hustle. It's obvious. So you walk away. You don't even consider it. And so, I think it's about taking time with people. And I'm agnostic. I don't care if it's in Wichita or in LA. Like, it doesn't make it better because it's in LA. I mean, people are smart all over this country. There are great businesses all over this country. And so you just have to listen and listen for it and find the right people. That's it. I mean, I think that's the whole thing.
You can answer this question how you perceive it. It's a little broad. What type of infrastructure do you need?
Yeah, well, to do this right, I mean, you need analysts, meaning people doing analysis. You need other partners so that when you're talking to a company, you can't do it all by yourself. Like we talk about Marcus Lemonis, I'm sure he talks about it with other people. You can't do it. You'll trick yourself if you're all by yourself. You need a good finance person who basically is, again, he tells these numbers don't look right. Something's not adding up. This is not what it looks like. It's not what it appears, because most small companies don't have audited books and records. They have bookkeepers doing things. And so they are on QuickBooks. And so you need a staff. I mean, you need to group together. Like, by the way, that's a positive in college. If 5 people in college looked at each other and said, let's do this together, they would be more powerful than just doing it on their own. And so, but it's very hard to do it on your own. Very, very hard to both source, evaluate, execute, and don't forget the hardest one, monitor. Like, once you put the money to work, you got to keep monitoring. It's not as if you put the money to work and then whoop, it just works. And then, by the way, monitor is the second hardest one. Exit. You got to leave. There's an old saying, it's easy to put money to work, it's hard to get it back. You got to think about the exit when you enter. I mean, I do that all the time and I still get it wrong. If you're not thinking about how you get out when you get in, you haven't thought through your whole process. You have to literally walk through and be honest about time. It's not going to happen in a week. It's going to take years sometimes. So you better be into the business, because and by the way, the years go by day by day. They don't, so.
You mentioned banks, not really, but they probably have at a community level, maybe some competition or engagement, but who is your competition and what's different what you do compared to what they do?
Yeah. I mean, look, the difference, the banks aren't the competition at all. The competition is a bunch of smart people who have some capital, who want to put it to work. That could be people together who group together in a country club. I'm just using as an example. It's okay. It could be a bunch of young people who then ask and they get money from their parents. I mean, the beauty is there is an endless supply of opportunity. So I run into almost nobody. And if I run into them, it's tangential and one-off. The difference is when you, again, it's the 80-20-20 problem. If you make a mistake, we all make mistakes, it takes up 80% of your time. It's, that's the problem with the 20% mistakes. That's the biggest issue out there, is you're almost your own worst enemy. It's like you're playing golf against yourself, or you're playing your own solitaire game, because you can bury yourself in problems if you rush into too many investments. That's what I see. I see a lot of people, they get excited about being part of this investing community. They invest quickly, and then all they're doing is working out of problems for years. And they get once bitten, twice shy. They don't want to do anything. You can't say that because you made a mistake in one place, you never should do it again. That's a terrible way to be an investor. Again, I have all these sayings, but I mean, they're all from someone else, so not my sayings. But like, good athletes have short memories, right? So do good investors. Like you have to know what you did. You have to understand it and learn from it. But if you harp on it, you're dead.
It's terrible. Yeah. And that applies to many things in life. And
by the way, by the way, and if people are harping on it, like even your parents, or don't listen, in my view, and don't get them to come around, because you don't want the negative energy. I mean, look, you made the mistake, own up to it, move on. If some person is going to remind you of your mistake, I would tell them to, go take a hike. I mean, I don't need to be reminded of it all the time, and neither do you, basically.
One thing that I sometimes look at, and I didn't create it either, is really with anything, you kind of have three choices. Let's stick it mainly to business. You could elect to, I'm doing the right thing to stay the course. I'm on the 5-yard line ready to score, but I just don't know it yet. I'm staying the course. I'm going to pivot. Or it's an ugly word, but there are some times when just quitting and getting out, because maybe a better opportunity is elsewhere. So if I look at those three things, do you actually, without thinking about it, have a similar focus in terms of what you do when you're looking at opportunity, or looking to, again, stay course, pivot, or get out?
100%. I mean, again, if you're not proactive in your decision-making, to me, that's the worst. So either do one of those three things, exactly what you said. If the answer is, I don't know what to do, so I'm going to do nothing, and I'm just going to have to react to what happens to me.
Oh boy.
That's the worst decision you can make. So, and by the way, once you make that decision, I mean, don't look back. Like, your head goes this way. You're not an owl. Just walk this way, and basically don't look back. And when someone reminds you that the thing you left became the best company in the world and you missed out, understand it and move on. If you talk about it at dinner for the next 10 years of your life, that you coulda, woulda, coulda been part of something, you're going to kill you. You're going to, it's crazy. It's not a good idea. Just make your decisions and go forward. I mean, one of the best lessons I ever learned was from my dad. And he said, and this is his quote, this one's real from him. It says, time is a non-renewable commodity, so don't waste it. That's exactly right.
Great advice.
It was the best advice he ever gave to me. That was it. Non-renewable. So don't waste it. And by the way, don't wait for things to happen to you. Like, make your own decision and live with it. And it's okay. I mean, I think you'll be happier with yourself if you do that.
For sure. Peter, I'm going to check in. I do have a couple of more questions, but I don't know if you were tight at the top of the hour. Do you have 10 to 15 more minutes?
Yep, I do. I'm good.
Okay, good. Let's do it. People talk about secret sauce of structuring. What is yours?
I thought about this a little bit, because I was thinking about like what you might ask me, and I was saying to myself, what it really is simply is you have to listen. Like you have to be creative, and you have to listen. Like, you'll learn in school or you'll learn on the web. There's, you can give equity, you can have debt, and you can have all this weird stuff in between. Just listen to the problem or the issue or the need, and then figure out what you would do. Just like you're a little kid flipping cards or just figure it out, and then figure out legally and how you can paper that up so it does what you think you want to accomplish. That's it. If you try to be like Mr. Business School guy and be like, that's a convertible bond, that's a safe agreement, it's a joke. It's laughable.
Yes.
Just think about what is the way you want to accomplish it. And every time you do something, it's going to cause, again, unintended consequences, restrictions and constraints and opportunities. So just know the kind of structure you're putting in place, and does it give you that flexibility you need or the inflexibility that you want? I mean, you got to decide which side of the trade you're on. But that's the secret sauce: is listen, think, come up with an idea, and then figure out how to make it so that it looks like an agreement.
My next question I often think of in the hedge fund world. I'm going to ask it to you. We hear that you should invest in a space where you have an edge. What is yours?
I think the edge is experience. I think the edge is that this is what we do. I think that's the edge. I think the edge is, look, sourcing. Other people could go and try to find a lot of things. Curation is hard because if you chase too many things, you get nowhere. If you don't know where you're going, any path will get you there, kind of thing. So I mean, like, you have to know where you're going. You have to, by the way, and it's not always the nicest thing, you have to say no a lot. And you have to say it graciously and not try to belittle the person. Say, it's not for me, an interesting idea, but not for me. It's like telling someone their baby isn't attractive. You never say that. You go, what an interesting baby, So
Yes.
so I mean, you want to be gracious, but you got to move on. Again, you can't waste your time. I think because of experience, we're good at that. And then once you get involved in something, get involved. And again, I think this is an advantage for us, is start to get involved, listen, and implement right away. Do not waste time. Don't just sit there and hope it's going to fix itself. So I think this all goes to the monitoring. I think there's a lot of investors out there who make the investment and then sort of move to the next thing. And I think that's the mistake. And I think our advantage is I can go through my whole book right now in my head into you, literally down to the screws of the investment. It's because I like it. It's not because I'm so good. It's because it's like my son who knows the 14th player at the end of the basketball bench. It's the same thing. I know my investments down to the screws. If you're going to be an investor, you better know that, because even when you do that, you're going to make lots of mistakes.
Are entrepreneurs born or made?
I think they're grown, personally. Like you may not know you're an entrepreneur, but you're in an industry that you're working at, something's inefficient, you don't love what you're doing, and you suddenly see a crack that you can get into, a light, like a tunnel, and now you're an entrepreneur. I think some people are born entrepreneurs. They just want to try new things. But some people are grown, they're created by their experience. So my view is, again, get as many experiences as you can. Take that. Look, I worked construction for a guy for 2 years. And
so did I.
Yeah. And you know
hard
what?
ass work, and made me realize I didn't want to do that. It's too hard for me.
That's right. But I learned a ton about a lot of things. So you want to be in businesses where you watch the hand-to-hand combat right in front of you.
Absolutely.
That's why I like the jewelry business, the construction business. You're watching business in front of you. The worry I have with guys who are bankers is they're so buried beneath the layer of what the real business is. All they think is that the vice president ahead of them is important, or the managing director. Those people are not important. They're nice people, but who's important is the client that you're serving. And so if everybody focused on the client, that would be a better business model. But they don't. They focus on the guy that writes them the recommendation for their bonus. So, that's why that system, I don't think, grows entrepreneurs, personally. But if you're in a business where you can see the hand-to-hand combat going on, anyone can be an entrepreneur.
Staying on that subject a little bit, it could be taken many different ways. I'm often asked and engaging with really smart young people, like you said, wow, they're very, very impressive to me. But sometimes you just see that it's hard for them to take action. I'm a little bit of a believer, and you could argue against it. A good plan today is better than a great plan tomorrow. Maybe General Patton said that, I'm not sure. I tend to skew to people that are smart enough, tend to be creative and disciplined, and are very much self-starters and take action. I mean, it would be great if they have a 160 IQ, although I wonder if actually that paralysis by analysis, they overthink things. They're never, Angelo, I got to do more research. I got to do more research. I got to do more research. You could find different points of view on any subject on Google. You could wear yourself out. It's like you do have to start to make a decision, to take action, and then adapt or pivot, like I said earlier, if you need to tweak it, which, by the way, you always do.
Yeah, right. I mean, look, the journey starts with the first step. If you don't take the first step, you'll never get on the journey. I mean, my view is you got to try. And not trying is the failure. And you're right. Analysis paralysis is a failure for a lot of people, because that's really just the fear of what will happen if I fail. Will people look at me poor, I'm be ashamed of what I did or whatever? Believe it or not, I mean, I've tried a lot of things, and by the way, I failed at a lot of things. What happens is more people come out of the woodworks to help you than you think. They really do. And by the way, the people who want you to fail, don't listen to them. The people who actually will be impressed with your courage will come out, and they will help you. You won't fall nearly as far as you think. And failure is really just the road to success. I mean, don't think of it as failure at all. Like, I think that's again, it's psychology. I think it goes back to that. I'm afraid that if I do this and I fail and I get off the track of being a banker or whatever I'm doing, then my parents will say something, or my friends will be like, he really went off track. That's not what happens. What actually happens is everyone wants you to succeed. It's fun to be around someone who's energetic about something. So I agree with you. A good plan today is much better than a great plan tomorrow. It's not even close. By the way, an average plan is better today than a great plan.
You're taking it a step further.
Right.
Why have you chosen to put a substantial part, I'm assuming, of you and your family's capital into this space, which can be challenging and is illiquid?
Yeah, I mean, really, other than liking it, I've been doing it for a long time. Even though I was in the public space, I've been investing in private for 25 years. I feel comfortable. And if you invest over time, then some of the illiquids become liquid, and the new things that you're investing become illiquid. I mean, so it's a little bit over an arc. When you look at the arc of an investment cycle, it's not as if my portfolio is all illiquid. I've got things going at different stages. But I think it's a better place to put your money. Again, and again, it's not fair. I'm making very big generalizations. I own the S&P, the Qs, the IWM, and all my private stuff. And so far, I know I'm missing out if I could have picked a better individual stock, but it would take me a lot of time. And I don't have enough of that time. So I give some to some of my buddies who are in the hedge fund industry. And I always say the same thing. If you beat the S&P, dinner's on me. But I'm pretty sure dinner's on you. That's what I say,
Yeah, you've been, for the most part, and the long short managers have been broadly, you're right in terms of your comment. We'll see if that will flip a little bit, like I said earlier. Right. In our final couple of minutes, then we'll get to a close about how people could learn more about you, that may want to reach out, that may have a business they want to show you, or may want to simply be an investor. But I do want to bring up something that we hinted at a little bit earlier. I'll try not to get on a high horse too much about it. My audience knows I talk about it a hell of a lot. And that really is just how things are changing from a technological perspective, if I could use that term, through the blockchain, through crypto, through tokenization, and really what's coming. We're not quite there yet, although in some ways we actually are. And that would be DeFi, that's decentralized finance. So and how that's gonna, could I go with the word wipe out the intermediary? I mean, do you realize there's companies being created that don't have a CEO, that don't have a board of directors, that are not centralized, that don't have one computer you shut down? And it's happening in the world of insurance, and it's happening in the world of banking, and it's going to accelerate. My opinion is, we hinted at them earlier, and you gave them a pretty rough blow in the stomach. Now I'm going to punch them in the chin. Small banks, I think, are in trouble. I hope there's still value in community banks and what they do for their communities and help the people and small business owners. But when you look at upcoming with central bank digital currencies, which are programmable money, the need for savings and checking, which is moderately profitable for these banks, is going to practically disappear. And lending is going to be replaced by much of what's going to happen in the world of DeFi. I think the top 10, 15, 20, perhaps even 25 or 30 banks, the Goldman Sachs's, et cetera, they're already in this. They're going to adapt. They're too big and powerful, and they're also smart as a whip. But this is going to be a challenging environment moving forward, especially 2 to 5 years from now. And I know you pretty much agree, but I think your timeline is a notch or two further out from me. To punch me in the stomach a little bit, I was one of those people 7 or 8 years ago at conferences that said, by 2020, we won't be driving cars, they'll be driverless. Well, I was wrong about that. So I'm probably wrong more than I'm right. But everything in my gut, and admittingly, I'm very deep in this aspect of the community, what's happening and the things that I'm noting with DeFi are going to really change the world and could impact what you do as well. Your opinion?
I think you're right. But again, I think time frames are a little longer. Look, the pager is still hanging around. Why? I mean, why are people using pagers? The newspaper, people over 50 pick up the newspaper still. Why? Because we're creatures of habit. Banks are still open. Why? Because some people like going into the bank because you talk to somebody and it makes you feel good. And before COVID, you got a lollipop like in a bank. And so I agree with you. Will it put me out of business? It will shrink my business. And will it create new opportunities? I'm sure it will. I just don't know what they are. Again, I have to listen to the market too. I agree with you. By the way, I agree with you that we'll have driverless cars. It just takes longer. Like I'm 50, well, I'll be 51, or I am 51. I would be very uncomfortable sitting in a car, not looking at the road and reading or falling asleep. But I'm sure some 25-year-old listeners like, yeah, whatever. Like it's a different story. I mean, I think it's just we're creatures of habit, and there are still people between 50 and 80 and 90 and 100 years old who are still around, and it's a socialization thing to go to a bank. I know that sounds almost ridiculous, but that's what'll keep them alive for a little longer. Just like the newspaper that still gets thrown at the front of my house in the morning. Like, why? I read the newspaper on the computer, but I still get it thrown at my house every morning.
Until it's less profitable for them to stay open because there's so few people that are utilizing their services, and the investors and people behind it may have a better use of their time and capital. But like you said, if I'm thinking 2 to 5 years, maybe that is 15 or 20. It's not 30 to 50 years.
No.
I can tell you that. It's not going to be decades like that.
I agree. And I hope though that when the branches are gone, like I just don't want the human element to be out of it totally. Because like you get sometimes you have a question that's not as standard as the choices they give you to 1 through 5 on your telephone, hit number 1 or 2 or 3 or 4 or 5. Sometimes you need to talk to a person. And that person can explain to you something that you might not otherwise have known, and they can help you. I'm worried about that because, I'm not the most technologically savvy, and I don't feel like having to call my kids to help me deal with taking money from the bank, or what happens if I lose my key fob or whatever that has all my Bitcoin on it. Like,
what's gonna happen when Angelo's opinion, 5 to 10 years, maybe it's longer. Like I hinted at earlier, central bank digital currencies, the government is going to control your interest rate. That effectively is kind of going to be your savings and checking. And you're going to have a government controlled, maybe a little bit of a strong word, true, digital wallet. Like you're going to be almost forced to learn how to do this, I think.
At this stage, they know everything about me anyway. I go through the airport, I do the clear.
Oh, trust me, they do.
And so my answer is fine. You live a decent life, but I'll have to learn it. I'm pretty sure my grandkids, I don't have them, but they'll be laughing at me because it'll be like, grandpa doesn't know anything. And it'll probably be true. It'll probably be true.
Peter, what can I say? This has been really a lot of fun. For those that would like to learn more, they may be an entrepreneur that fits some of the criteria that you were mentioning. They may simply be an investor, a family office that wants to learn more and be active in small businesses because it's good for the country. And it may end up, damn it, being good for their pocketbook as well. No guarantees. Do your own diligence. Think for yourself, like I said earlier. But that being said, how could they learn more about you and your company?
You can go on the web, you can look us up, you can call us, I don't know if I'll tell you, phone number is 914-694-5777. I'm more than happy to listen to people who want to start a business, an entrepreneur, or a company that needs capital. Obviously, those are the things we invest in. And then, of course, investors are welcome to call us and of course, do due diligence and make sure it's right for you.
And would you mind giving your website or preferred URL or landing where they could follow it?
Yep, www.troobcapital.com. And there it is.
And Troob is Troob. And what is your email or someone from your team that people may want to reach out to?
I'm P as in Peter, Troob at troobcapital.com.
Okay, pretty straightforward. Well, this is great. I really enjoyed my conversation, hopefully, as you could tell, with Peter. I'm Angelo Robles. I'm host of the Angelo Robles podcast and the founder and CEO at Family Office Association. Check us out at familyofficeassociation.com. We're also active on social media, pretty much all the platforms. I take a special look at some unique things I'm doing on Instagram, and that simply is our company name, Family Office Association. Sorry, it's so long. We're a little easier on YouTube, which has probably been my most active platform. We're simply Family Office. You'll find it. Go and subscribe. Everyone, thank you so much. And Peter, thanks for being a great guest. Thank you.